Comment Is anybody missing besides Oscar? Okay, does everybody see the announcement I made at the beginning of the chat about the Chapter 7 quiz? I completed it and posted it last evening and set it to select 14 questions. And when I looked at it this morning, it had selected more questions from the test bank than there were questions in the test bank. So something's gone wrong with that, and I'm going to have to figure out what went wrong and then fix it before it's ready for you to take. And let's take a quick look at that right now. Let me turn on my share screen. Okay, so notice it's saying 34 points. It's supposed to be a 7-point quiz. And if I go back and look at the quiz, the way I set it, right here it says pick 14 questions, 1/2 point per question. That makes 7. So how it is getting 34 is a complete mystery to me. And hopefully I can get that figured out sometime later today. We have one of our IT staff guys is pretty much an expert on Canvas. I'm going to give him a call or email and see if he can get that figured out. In the meantime, we've finished the Chapter 9 PowerPoint. So I wanted to get started on Chapter 10 right now. And so now we are moving out of state and local government, and we're going to take a look at private not-for-profit organizations. So the learning objectives are to describe characteristics of private not-for-profit organizations and the accounting for contributions, apply the accrual basis of accounting in the recording of typical transactions of a private not-for-profit organization, and prepare the financial statements for private not-for-profit organizations. So what I want you to note here is that GASB is the standard setting authority over government-related not-for-profits. Not-for-profit organizations owned or controlled by a governmental entity should follow applicable GASB standards, and most commonly these follow enterprise fund accounting. FASB is the standard setting authority for private sector not-for-profits and businesses too, of course. Now, long time ago, FASB had not issued any accounting standards for private not-for-profit organizations, and the AICPA couldn't wait for FASB to act, so they set up audit guides that set the accounting standards for private not-for-profits, because if they're going to have their financial statements audited, how could they say whether they're fair or not fair statements if there were no criteria? So the AICPA came up with its own criteria, and later on, FASB has a few pronouncements. Pretty much a lot of the regular accounting for businesses applies to private not-for-profit organizations, but they have their own unique aspects. And so FASB Statement 117 was written to bring comparability between the financial reports of private colleges, private hospitals, voluntary health and welfare organizations and other not-for-profits. But because college and hospital settings are pretty different, they're going to each have a separate chapter that we'll take a look at after this chapter. Not-for-profit organizations are corporations. In order to be able to sign contracts, open bank accounts, and own property, a not-for-profit organization must register with the state government as a corporation. However, they are not shareholder-owned corporations like a business is. Think of a corporation as a body. The word has the same Latin origin as a corpse. If you see them one word above the other there, corpse, corporation, you see the linguistic connection between the two words. Both relate to the idea of a body, but a corporation is a body that's a legal entity, not a biological one. Most not-for-profit corporations are tax exempt. They don't have to pay income taxes, and usually state and local governments don't make them pay property taxes. But political organizations are not tax exempt. Tax exempt not-for-profit organizations are often called 501c3 organizations because that is the section of the IRS code under which they're listed. And that's a term that you need to know on a future quiz. 501c3. Questions on anything so far? Common types of not-for-profit organizations include charities, houses of worship like churches, synagogues, and mosques, religious organizations such as denominations or missionary enterprises, sports organizations. The textbook's focus is on voluntary health and welfare organizations, which they could be normally non-religious. It could be something like a not-for-profit symphony orchestra or a museum, be some kind of charity organization. So governance. Most charities and nonprofit institutions, like private colleges, are governed by a self-perpetuating board of directors. People currently on the board nominate and vote for new members to replace those that are rotating off. This is how Belhaven is governed as a nonprofit. The board of directors normally hires and fires the organization's president, who in turn hires or is responsible for hiring the remainder of the staff. The users of the financial statements of nonprofit organizations are normally lenders if the organization needs to take on debt. And I'm talking about external financial statements. Internally, if they're big enough, they would have a financial officer who would use their own. And donors, especially major donors, may want to see financial statements before donating. The not-for-profit organization also has to file an annual form with the IRS to maintain its tax-exempt status. And the reason for this is that the IRS wants to make sure that the tax exemption is legitimate. You can find in the dark web websites that will try to have you found a fictitious church so that you can claim you're a pastor in it and not pay property tax on your house or something. Bogus things like that. So these organizations then have to file what's called a Form 990 with the IRS. Maybe we should, those of you who are taking business tax this semester, have you looked at that? Apparently not. Let's take a quick peek in the internet then. It says the tax-exempt organization must file an annual information return or notice with the IRS. Form 990 is the IRS's primary tool for gathering information about tax-exempt organizations. Them to educate about tax law requirements. I just had to mute some people because of background noise. Organizations also use the Form 990 to share information with the public about their programs. For example, one of the things on the Form 990 is they have to give the salary paid to the top executives of the organization. And that's the way some people look to see if it's legitimately a charity organization or not. If the salary is too high, the IRS may question whether this is really a nonprofit organization, and so would donors. And there was a scandal back in the, maybe 15, 20 years ago that they found out that some of the executives for charity organizations like the United Way and Red Cross and some of the others were being paid over $500,000 a year. And for an organization that's begging for money, that seemed rather extravagant to a lot of people. Okay, back to the PowerPoint. Any questions so far?
No, sir.
Okay. Then let's go on to the next slide then. Voluntary health and welfare organizations. They promote general health and well-being of the public. They tend to operate mainly from grants and gifts. Examples: United Way, American Cancer Society, Girl Scouts, YMCA. And by gifts, they mean donations, which could be small or large. Basis of accounting. Generally speaking, not-for-profit organizations record and measure transactions and events in the same manner as commercial enterprises. They do, however, differ from commercial enterprises in two important ways. Not-for-profit organizations receive considerable amount of resources in the form of donations, and donors frequently impose restrictions on the use of these resources. That is, they give a donation but say that they want it to be used for some particular purpose. And there's really a third important difference that they didn't mention here between not-for-profit and commercial companies, and that's the absence of ownership interest. So because of that, because of these three things, the financial statements will look a little different. Basis of accounting and use of funds. Accrual basis is required. This includes calculation and recording of depreciation expense. Financial statements report expenses, not expenditures or encumbrances. Funds, many private not-for-profit organizations use fund designations internally for bookkeeping purposes, but the financial statements are on an overall basis and don't make reference to the funds except in the notes or supplemental schedules. So a fund example, the offering envelopes at my church have 4 boxes members can designate for their offering. Check off box number 1, the general fund. Box number 2, faith promise, which goes to the missionaries. Box number 3, debt reduction, it pays down the mortgage. And 4, other, the member can designate how it should be spent. And so a lot of these VHWO get their contributions in a similar format that are designated to be for particular funds. What do you think would be the kinds of designations for Belhaven University that donors might stipulate, saying, I want it to go to this, not to that?
A building instead of a parking lot.
Okay, and frequently buildings are financed by major ticket big donors and they get their name on the building. The University Village is named after what people?
Is it donors?
I couldn't quite hear you.
Is it donors?
Yeah, but I mean, what was their actual name?
Oh, I don't know.
It's on the side of the building and I can't remember it. Like
Irby?
No, Irby. Well, actually, Bitsy Irby Hall is named after a family member of the Irby family. Stuart Irby used to be on the board of directors. His family was, back in the 1970s and 80s, Belhaven was on the verge of closing because it was so short of funds. And there were contributions from 2 families that kept it going. And that was the Hood family. Is that name on any building?
That's not related to like Jim Hood family, is it?
No, no. It's a different Hood family.
Okay.
Hood Library is named after that guy. His picture's in there somewhere. And then the Irby family. And so Irby Hall was, the central part was built around 1955. They donated the money for it. Um, after Stuart Irby Sr. died, his son was on the board, but he later went crazy and killed himself. And then I can't remember the name of the family that gave the money for the university village. Robbie, I think, is the woman's first name. At any rate, what other kinds of things do you think people would donate for besides buildings? And parking lots, we really could use donations for a parking building on campus, but nobody's going to give money for a parking building.
Statues, fountains.
Yeah, statues and art. The college I went to has these brass sculptures all over it that have been donated. A bunch of eagles, one of Margaret Thatcher, one of Winston Churchill. There's a statue on Belhaven's campus by Preston Hall that's supposed to represent the Belhaven student around 1900. She's holding a flower, an algebra book, and is wearing a long dress. I don't know if you ever noticed her standing back there in the shrubbery. I'm thinking that in many colleges and universities, the athletic program is a big designation for funds that are donated, to the point in some places where it actually becomes illegal because they're donating too much. And they end up donating not to the program, but to the athletes.
We don't have that problem here, do we?
If we do, it's pretty well hidden. And I would say that the last thing Belhaven's ever had is a problem with too much donations. So, okay, let's move on to the next slide. Donor restrictions. Donors may designate how they want their donation spent or invested. If a donation is made without a designation, then it may be used as needed. Designations can be for particular use, building fund, artwork, scholarship fund, for an endowment where the funds would be invested. You're not supposed to spend it. You use the profits for a specified purpose. Some universities have huge endowments that finance most of their activities. Harvard's endowment is in the billions of dollars. Belhaven's is not. 3 required financial statements: statement of financial position, statement of activities, statement of cash flows. Notice no statement of owner's equity because there's no owner. FASB requires all not-for-profits to provide information on expenses by both functional and natural categories. But those details can either go right in the statement of activities, or it could be reported in the notes to the financial statements, or they might have a 4th statement after these 3 required ones called the statement of functional expenses. So statement of financial position. Assets don't have to be classified as current or non-current. Same for liabilities, but they can be. Long-term assets and debt are reported. Now, when I first read that, I thought that was contradictory because it said it doesn't have to say current or non-current, but they have to report long-term. And what I realized is what they're talking about here is they're contrasting that with governmental funds that don't include their fixed assets or their long-term debt. So nonprofit organizations do have to show that. Now, instead of owner's equity, they have net assets. So assets minus liabilities equals net assets. And they're separated into two categories, without donor restrictions or with donor restrictions. And that's a recent change in accounting standards. The previous one had, I can't remember, 3 or 4 categories. And the names of them were really misleading and confusing. What they've got now is pretty straightforward. It's either restricted or it's not. Statement of activities. The statement must distinguish changes in net assets that are without donor restrictions from those with donor restrictions. Restrictions must be outside donor imposed. In other words, it can't be designated by the organization's own management. As donor restrictions are satisfied, reclassifications are reported as net assets released from restriction. The excess of revenues over expenses is termed change in net assets. What is a business called the excess of revenues over expenses? They call it net income. But if it's nonprofit, it's not supposed to be earning an income.
They call it net position. No, that's a government, ain't it?
Right. No, I said a business. So a business's
It's net income.
revenues over expenses.
Change in net assets.
Okay, so you see the chat in case this audio is not too good.
Oh, so you're saying that revenue over expenses?
Yeah, can you see the chat?
No, sir.
Move your cursor over the bottom of your screen and click on the chat bubble. Do you see it now?
Yes, sir.
Okay.
Okay.
Okay, so the nonprofit's not supposed to be earning income.
Oh,
So they call it change in net assets instead of net income.
I got you.
Statement of activities. All expenses are reported in the without donor restrictions column. And they classify expenses as either program, carrying out the organization's mission, or supporting services. Supporting services include management and general, fundraising, and membership development. So let's say that the organization is the Red Cross. What is their mission? What's the mission of the Red Cross?
To save people.
I couldn't hear the second word.
Save people.
It still sounded like stave.
Save people.
From
Medically induced problems.
or disasters.
True.
So helping people from disasters and things, that's what the Red Cross does. So money paid to the people running the organization, that's not their mission. Money paid for advertising and fundraising, that's not their mission. Membership development, that includes advertising and providing information to members and so on, that's not their mission. So all these things may be necessary to run the organization, but when someone's donating, they want to see how much of the money goes to the mission. And some charity organizations, their supporting services are 90% of their spending. And if I'm a donor, I want my money to go someplace that's a little more efficient. So they have to show this breakdown on the income statement, or the statement of activities. So let me enlarge this. Actually, I think I better just do the slideshow on that. All right, so is everybody seeing the two columns here with the total?
Yes, sir.
That's without donor restrictions and with. So what would the 50,303 mean? That would be the total amount that was donated to them in that fiscal year. And of the 50,000 that was donated, 16,883 was designated to be used for some particular purpose. And 33,420 was undesignated and could be used on whatever. So now we go down here and it says that of the 16,000, of the restricted money that they had, they were able to spend 3,096 of it. And so they're taking it out of the restricted category to show that they spent it. And so here's the things that their revenues came from. Contributions is the bulk of all their revenue. They charged admission. If you are charged admission, can you tell them how to spend the money? No, it's unrestricted. Concessions, like a concession stand selling snacks or drinks. Interest income, net gains on endowment investments, tuition. If this is an arts organization, how are they getting tuition? They probably give music lessons. Okay, so what did they spend the money on? Performances, ballet school, neighborhood productions, performing arts grants. So programs, 16,646. Supporting expenses, 8,128. Management, fundraising, membership development. So looks like about 2/3 of their spending goes to programs and 1/3 to overhead. Questions or comments on that? Here's this expenses are reported as without donor restrictions. And then I talked about program and supporting. I also talked about net assets released, then it's taken from that category and shown as revenue is unrestricted. Statement of cash flows. FASB uses 3 categories, which you learned in Accounting Principles 1 and 2, operating, investing, financing. Operating includes operating activities plus interest expense, interest revenue, and gains and losses. Investing, purchases or sales of fixed assets, as well as purchases or sales of long-term investments. Financing, issuing of debt, prepayments of principal of debt. Like businesses, not-for-profits have the option of using either the direct or indirect approach. Now, if a business uses the indirect or uses the direct method, then they have to provide a reconciliation using the indirect approach to reconcile it to the income statement. But nonprofits don't have to do that. They use the direct approach. They don't have to also do the indirect to reconcile it to their statement of activities. And we have reached just about the 40-minute limit for the class. So what we need to do is have you check to see which of the homework assignments have come due that you haven't done yet. And then keep seeing top of my head. And then if you haven't taken the Chapter 6 quiz, you need to get on that. There's no reason you can't study for the Chapter 7 quiz because all the stuff in the study guide is posted on Canvas. But don't take it until you get an email from me telling you that I've fixed the tech problem on the quiz. If you came in late, you might not have heard there's something wrong. The quiz is set. I can open back up the slide right now and show you. I set it to pick 14 questions at half a point per question. And yet when it adds up all the questions now, it's got 34 points, meaning that I don't even know how it can do that. There weren't that many questions in the test bank. So I got to figure out what went wrong. When that's fixed, I'll send you an email, and at that time you can open up the test and take it. Okay, if there's no other questions, then I'll see you again on Friday. Take care, listen to the medical advice, be careful. See you then.
Thank you. See you.
Bye.